Hey guys, what is happening, and welcome back to Market Mania. So today's video, we've got a different setting. I thought I'd do a video here out and about because why not? So today we are talking about investing psychology. It's one thing that people need to know about, and people need to know the trips, the things that can trip them up with mindset, and also the emotional mindset and why it doesn't work when it comes to making financial decisions. So without further ado, guys, let's go. All right, guys, so we are talking about psychology of investing, and it is, to me, the most important thing that you need to have when investing, when building a business, when making a big financial decision. And it is paramount in just building any wealth that you want to have in your life. One thing that people never do is define risk. You have to define risk. You know, it's like right now, there are a lot of people waiting to buy, and there are a lot of people who FOMO'd into the market way more than are waiting. And the thing is, you see this with stocks, you see it with the real estate market, and I'm just going to explain it to you real simply. Is what happens is, these people have been waiting, let's say you've been waiting, and the price is finally plateauing, you've reached the top of that peak and you're starting to flatline or even go down a little bit. And those people, they see that stock or house is now affordable in their eyes. So they think, you know what, we're just going to buy in now. The price has come down a little bit and we're happy with that. And then normally what happens after that is the price just tanks and they're left holding the bag. And there's a couple of reasons why that happens, is because when you make a bet, and I hate to say it, but if you're holding off buying a house or anything like that, you're making a bet without even knowing about it, because you could be wrong. There is a small chance that you could be wrong and prices could go way further before they drop, or we could see negative interest rates just make it last longer. There's a great saying, which is the markets can stay solvent longer than you can. And that is so true when it comes to any market, be it real estate, stocks, cryptocurrency, whatever it is that you're trading. You have to be vigilant. So when it comes to making an investment or buying a house, like, how should you approach that psychologically? Well, you've got to think that you've got to have a target of where you want to buy. And that is so paramount. If you right now are waiting to buy a house, let's say you can't afford it right now, you need to have like a kind of target price or area that you want to buy at. Because otherwise you're just going to be like running around like a headless chicken with no idea when you're going to invest. You'll probably just invest when prices dip into your budget, and then the prices will fall further and you'll be like, oh no, we bought at the top of our budget and we could have waited like 6 more months and then bought in at the bottom of our budget. And you know, that's the same when it comes to crypto, stocks, real estate, whatever assets it is. And the other thing is, people make emotional decisions and buy things, and it's so bad. Emotional decisions will screw you. We've all made them. We've all had FOMO and stuff like that, but you need to be so hyper aware of FOMO. And FOMO works both ways. You know, you can FOMO sell and you can also FOMO buy. Now, you've only seen FOMO on the one side at the moment, but I believe in not too distant future, you're going to see FOMO on the sell side as well. And there's a reason why that will happen too, and it'll have the similar cascading effect that you've seen with real estate price increases. So what do I mean by that? Well, essentially, we've seen this mania run in prices. When it comes to inventory hitting the market, you're going to see the same thing. there is a ton of people right now that are holding off selling their houses. They might be hoping for better prices. They might have think they missed the spring market this year, so they'll list next year. There is a hell of a load of things. But as soon as loads of inventory starts hitting the market and prices start declining, those people are going to start selling. When it comes to any market, you have to think logically, okay? If there is a big run up in price that happens really, really fast, then that is unlikely to be sustained. And there's a couple of reasons for that. The thing is, they're borrowing buyers from the future, whether it's a stock or whatever. If there's no news associated, there's no fundamentals associated, like people's wages have gone up, they have to borrow volume from the future. So when they borrow volume from the future, what you'll see after that, and if you watch stocks, it's a great way because it happens much, much faster than, say, it would in real estate. But the same thing applies. So you get this big volume spike and you get all these people in, like we've had in the first 6 months of this year. We've had this huge volume spike in real estate, and it's mostly been on the buy side, which has led to price increase galore. And we've actually had inventory, so people willing to sell on a low, so that has just pushed prices even higher, made FOMO even worse. That's what's happened. But essentially what you'll eventually see is the buyers will diminish. We're already seeing that. Now, seasonally, it's a typical time of year where sales die down in real estate, but not by the amount that we're seeing sales die down by. It's pretty substantial. And the thing is, let's take Nova Scotia for an example. Nova Scotia prices in some areas are up 70%, which is just insane. You've had people moving from Ontario to Nova Scotia. They have no clue about the local market there. They just think, they're comparing it to Ontario. And that is that is a big mistake. I've got to tell you that. And that is a mistake that so many people have made during this pandemic. Trust me, guys, so many people have made that mistake. They made the mistake of comparing markets that don't relate. It's like comparing Amazon to AMC. It's just two different things. They're just totally different. So when people do that, things get dangerous anyway. The thing is, supply and demand will work itself out. And then when the sellers come in Nova Scotia, guess what? They all bought at a much lower price. So are they going to drop the price faster to sell? Yes, they will drop the price faster to sell, which will mean in places that have had a dramatic run up in price over the past 12 months, they are going to see the prices drop the most. And the reason is you've just simply got loads of people that own real estate and they bought low. They all own it low. Remember, relatively speaking, the amount of sales that were done in Nova Scotia this year and last year compared to the past 20 years, because real estate is a long-term investment, is just tiny, just fractional. So that means everybody owns their homes low. So when they're selling, they're going to be more inclined to reduce the price. And you will see that because there won't be as many buyers. In fact, what you'll be left with is mainly just local buyers who don't have the money to front up these huge amounts of money now for houses because Ontarians have moved across and drove up the cost of real estate. So you'll see those prices fall down dramatically. And why will it have happened? And it's no different to what's happening in Vancouver Island, people coming from the mainland and driving up prices everywhere there. Places like Nanaimo have seen 40% price growth in literally a year or so since the pandemic started. That is just unsustainable. And what I've just explained in this video is how it is unsustainable. And that's without a crash. That's without any of the other things that are going against real estate and are going to have an effect on real estate. That is just purely fundamental supply and demand and average price. And that happens with stocks too. You have to remember that. If you have a big volume spike and there's not many sellers, then the price will rise dramatically. But most people will own that stock at a low price. So guess what happens? They start selling, and it looks like a pump and dump when you look on the chart. And that's exactly what we've seen in many retail investor stocks. You're going to see that in real estate as well. I also want to say just real quick, I'm going to be doing a video on crypto because I did a video a while back on Bitcoin. I'm not a fan of Bitcoin. However, some cryptocurrencies are actually quite interesting. And I made my first crypto investment on Monday of this week. It was a small percentage of my portfolio, only 2.5%. And that's the thing. I am very risk off type of person. I'm a diligent investor. I don't just invest in random crap. I'm not YOLOing on Bitcoin or anything like that. So anyway, guys, I hope you enjoyed today's video. I hope some of the information was helpful. I hope it gave you some insights into how you should approach and think about things without emotion. You should think about the logics and the fundamentals because, as always, fundamentals always prevail. We know that. Just look at Warren Buffett's net worth. Okay, anyway, guys, thank you for watching. I will see you in the next video. Take care. Peace and love as always. Bye-bye.